Have you ever wondered how the stock market works? It's not as complex as it might seem at first. Simply put, the stock market is a bustling marketplace, a platform where buyers and sellers trade slices of publicly listed companies known as shares. It acts as a pivotal hub for the flow of money, helping businesses grow and investors build wealth. Now that you know what the stock market is, the next step is understanding how to get started. Starting your investment journey in the stock market might seem intimidating, but it doesn't have to be. Let's start with the basics. The stock market is a platform where shares of publicly traded companies are bought and sold. When you buy a share, you're buying a piece of ownership in that company. Investing in the stock market isn't just about picking any stock and hoping for the best. It requires research and understanding of the market trends. You need to read about the companies you're interested in, study their financial health, and keep an eye on news that might affect their performance. Now let's talk about risk and reward. Every investment comes with a certain level of risk. The potential for higher returns often comes with higher risk. However, you can manage this by diversifying your investments. Instead of putting all your eggs in one basket, spread them across different types of investments. This way, if one investment doesn't perform well, others might, balancing out your overall returns. Finally, remember that investing is not a sprint, it's a marathon. It's not about making quick wins, but about making informed decisions and playing the long game. Patience, persistence, and discipline are key. Remember, investing in the stock market is not about quick wins. It's about making informed decisions and playing the long game. You've got the basics down. Now, how do you actually buy stocks? First things first, you need to open a brokerage account. This is essentially your ticket to the stock market where all the buying and selling action happens. There are plenty of online brokers to choose from, each with their own set of features and fees. It's important to do your research and select the one that best suits your needs and financial goals. Once your account is all set up, it's time to choose the stocks you want to invest in. This step is crucial and requires careful consideration. It's advisable to start by analyzing companies you're familiar with or sectors you understand. Look at their financial health, growth potential, and industry standing, among other factors. Remember, investing is not about following the crowd, it's about making informed decisions based on your own research. Now it's time to place your order. You can choose to buy a specific number of shares or invest a certain amount of money. There are also different types of orders you can place, such as market orders, which buy at the current price, or limit orders, which only execute at a price you set. After your order is complete, the final step is tracking your investment. This doesn't mean checking the stock price every hour, but rather keeping a pulse on the company's performance and the market as a whole. Buying stocks is just the beginning. The real challenge lies in managing your investments effectively. Investing in the stock market is not a set-it-and-forget-it kind of deal. It requires active management. That's right, folks. When you've dived into the world of stocks, it's essential to keep up with your investments. It's like tending to a garden. You can't just plant the seeds and expect them to grow without care. Regularly reviewing your portfolio is key to successful investing. Don't just glance at the numbers, really understand what they mean. Are your stocks performing well? If not, why is that? A well-performing stock today may not be the same tomorrow. It's a dynamic environment that keeps you on your toes. Keeping up with market news is another crucial aspect. Just like the weather, the market can change rapidly. A company's earnings report, a change in government policy, or a global event can significantly impact your investments. So stay informed and stay prepared. Now, what if your stocks aren't doing well? Don't panic. It's all part of the game. This is where making necessary adjustments to your investments comes into play. Maybe it's time to sell some shares, or perhaps it's an opportunity to buy more of a stock that's dipped but has potential. Remember, this isn't about making quick money, it's about growing your wealth over time. It's a journey that requires patience, vigilance, and a willingness to learn and adapt. Investing in the stock market can be a rewarding journey if you take the time to understand it. Remember, patience and knowledge are your best allies in this venture. We've covered a lot of ground today, so let's quickly sum up the key points. We've explored the stock market basics, learned how to start investing, delved into the process of buying stocks, and discussed strategies for managing investments. And that's a wrap on our beginner's guide to investing in the stock market. Remember, every expert was once a beginner. Happy investing!